a traded elephant plus, not it's yesterday's price was here and it opens there, leaving a gap. That's not what I'm talking about. A traded elephant. All right. Okay. Now, so we got the elephant, 65% follow through. We've got the elephant plus, 73% follow through. How do we get the how do we get the 87%? Adding the clearing elephant, the clearing part to the elephant. Now remember, it's elephant plus clearing. So the formula, this is our Einstein formula. All right. What's Einstein's formula again? What is that? E. What is it? E. Anybody remember? E equals mc squared. Right. Okay. So our formula is that elephant bar plus clearing. All right. You want to add an equal there. Want to add an equal sign to it, and then you do this. All right. That's if you want to add the equal sign to it. Okay. But it's elephant bar plus clearing. All right. So let's talk about the clearing aspect. Clearing is when you look to the left. You look to the left now, and it has cleared the opposite color. It has cleared, I would say three or more of the opposite color. Let's go with that number. Okay. So let's say, for instance, you've got a red bar here. You got a green bar there. Green bar. You got another red bar here. See? Green. To that green. And then red bar. Something like that. Whatever. That makes sense. But 1, 2, 3, you are clearing, wiping out 3 or more of the opposite color. It's erasing the opposite color. It's cleaning out. It's cleaning up, clearing out the opposite color. It is undoing the work that was put in by the opposite color. That's the clearing aspect of it. Okay. And it's doing it all in one fell swoop. So if we were to take a look at this, elephant plus elephant plus one, 2, 3 or more, clearing in one fell swoop. Boom. Understand? We are catching the first elephant foot out. 1, 2, 3, 4. Completely out. Stock bottoms. Right? Powerful elephant bar. I don't know if we do here. Plus clearing elephant bar plus clearing, however you want to write it. Yeah, equals 87% follow through. You can become a master, a specialist in that. You can simply sit in the market with a small handful of stocks, have the windows open simultaneously for each one of your stocks, and just wait for clearing elephant bar pluses, and you will enjoy an 87% accuracy rate on follow through. It's crazy, all right? 3 bars of the opposite color, all right? Now, I want, let's see if we can find some others. Well, here's another one. You see how I went back in time. So this was at 2. Look at the time here. Let's go back in the same stop. Check this out. And go back in time and look at 1246. So elephant, let's do it again. Elephant plus 1, 2, 3 or more in one fell swoop. Boom. See? Follow through. Now, works for all time frames. Yes, everything I teach you will work for all time frames. All right. I know you want that assurance almost every time, but I'll say it every time. But it's going to be the same answer every single time frame in every market. Okay. Uh, this elephant bar clearing event, it has to undo work put in by the stock. See all this work? In one bar, you are destroying multiple bars of work. It took work to produce these bars. You see? This is work. It's time. It's proof of work. And you're destroying a chunk of the market's work in one bar. You're undoing. Think about this. 2, 4, 6, 8, 10, 12, 14, 16, 18. Let's call it almost 20. You're destroying or undoing 20 minutes of the market's work in one bar. That's like a Mike Tyson knockout blow. You understand? That's the significance of it. Okay. Now, oftentimes these elephant bar plus clearings, they are, what should I say? They are changing events. They're igniting events. They're changing something that was going on and igniting something new. So a lot of times you will be playing them against what was happening. So look, stock was doing this, now it's doing that, and then boom, there's your elephant bar plus clearing. It's changing what was happening to the left of it. 87% follow through. All right. Here, your stock has been doing this, then it does this, and then boom, there's your clearing. It's changing what was happening to the left of it. Wait a minute. What about this one? Boom, 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 boom. Can you have a clearing here? Yes. Boom. 1, 2, 3. All right. Oftentimes with this one, I tend to see red first temporarily, and then boom, the follow through comes after. That's right. Chris says turbocharge that thing. All right. Well, the 180 is not necessarily a clearing because a 180 is only required to take out one fat red bar, not three. Okay. You get into the clearing event when it's erasing a lot of what the market previously did, not just one bar. It's erasing a chunk of the prior price data. That's not a bear 180 or a bull 180. It's different. Okay. So when you add this to your arsenal, you see that clearing? Is that clear? Do you see that? Is that clearing clear? You see it? Yes. All right. When you add this to your arsenal, it's taking out red, 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 three reds. Boom. There's the clearing elephant. There's that skyscraper standing above everybody else. All right. When you add this to your arsenal, you automatically up your accuracy rate. Automatically. Like this doesn't take time. This instantly jumps your accuracy rate. And if you base most of your plays around clearing, you instantly become a high frequency profiteer. It's impossible not to. All right. Now, guys, you know these sessions aren't for covering a whole thing, right? I can't do that here. And that's the beauty of these sessions. We pull out one thing, we deep dive into that one thing. It's not a cursory brush through, right? We deep dive. This is powerful. All right. Powerful. Now, let's talk about the failures. Will this fail? Of course, if it didn't, it would be 100%. It will fail. Not often, but it will, right? And so, where do you protect yourself? We know we're supposed to go into the elephant bar plus bar. We're not supposed to be waiting. Once it becomes plus, boom, we don't buy we don't need a proof bar. We already have the proof in the plus. So we know we get into the bar once it's plus. We have to protect ourselves under the reason. If the elephant bar plus is the reason for getting in, then why would you want to stay with the stock if the market removed your reason? You don't want this down here, right? So that means that you have to be a bit careful at your risk here. If you get in here, how much are you going to lose if you have to exit there? You have to know that, more or less. And that loss has to be acceptable to you. If that loss is going to, if your maximum loss per trade is $70, I don't want to lose more than any $70 on any play. And this loss is 62, all right, you're in there. If that loss is 91, that's not your play unless you reduce your size to make it your play. So you follow what I'm saying. You have to have that all that aspect put together. All right. Far too many traders are entering these things with no thought for how much do I lose when it fails. They're only looking at the stars. They don't look at the potential fall on the rocks below them. And that's a mistake. So you got to be aware that your protection is right under there. That has to be an acceptable loss to you. All right.